We've just released our latest ISA briefing note on our estimates of the global real estate investable universe. We've been sizing real estate as an asset class and doing this analysis for over 10 years. It's a lot of work. There are a lot of data sources involved, triangulation that we have to do where the data is imperfect, various adjustments. But we think this is a really important piece of analysis for investors who are figuring out how to build real estate portfolios and where real estate sits within their broader multi-asset portfolios. I'm here with Frederick Burmester and Matthew Wappelhorst, who, in addition to being co-authors in the note, were also did a lot of the work with the data in the analysis. So they've been in the numbers and know it quite well. Frederick, so why do we care about the investable universe? What's the point for investors? Why is it worth the effort?
We really care about the size of the investable universe to figure out our portfolio construction, which usually starts at a neutral portfolio or where the market is allocated. In the next step, this allows going over or underweight in specific parts by applying your convictions. This is really the case independent of asset class. So whether you have a stock portfolio or a bond portfolio or a real estate portfolio or a multi-asset portfolio, you should know where the market is allocated. And when we look at the real estate market compared to stocks and bonds, we see that it's really like a smaller sibling, at least in the case of the institutional real estate market. We see that income producing real estate as a whole is about half the size of the equity market and 45% of the global bond market. If we include owner-occupied residential properties, this grows and it actually outgrows the equity and bond markets. Thus, real estate should really be a part of any multi-asset portfolio. In the next step, we can then break down where this capital is allocated, both geographically and by sector, to figure out what a neutral real estate portfolio looks like.
So in that next step, looking at where the allocation of that investable universe really sits, one of the findings in this year's update that's been consistent from all of the updates we've done is that real estate really is a very global asset class. So what do those country and regional breakouts tell us, Matt?
Yeah, so roughly 1/3 of the total universe is comprised by each region of North America, Europe, and Asia Pacific. But it's still largely dominated by a few big countries, with about the top 8 countries making up about 70% of the real estate investable universe. This can be helpful to know as it can always be challenging to understand the tax regime and legal systems and other variables when entering into a new country.
Right. So if you can get, global exposure with a smaller number of large countries, that's helpful in not having to do sort of excessive analysis for an excessive number of countries in creating a diversified portfolio. Beyond that kind of country and regional level, we also found some interesting patterns looking at the universe at a city or metro area level. Frederick, what were those patterns?
There were indeed a few facts we found out when looking at the city level. One is institutional capital is really concentrated in the largest metros. Here we found that 40 of the metropolitan markets together host more than half of the institutionally invested real estate. Some of the metros are even bigger than whole countries. Tokyo, for example, is larger than 197 of the 201 countries we covered in our estimates. Another thing we found was that globally allocated capital is similar in size across North America, Asia Pacific, and Europe. But if you look at the city level, there are differences. One is that Asia Pacific is really a region of megacities. Here, 19 metros account for 3/4 of the institutional capital. In Europe, the capital structure is a bit different, and it's more dispersed, with 47 metros combining for the same fraction. This, of course, requires different investment approaches and tools, such as, for example, our LaSalle European Cities Growth Index, which combines fundamental real estate demand data to point out where relevant cities sit.
So if you have got more cities, you to cover the same amount of the universe. You just have to spend more effort on really differentiating between them and picking and choosing. It's more complicated. So, Matt, if the viewer wants to learn more about our work on the investable universe, what should they do?
Well, they should take a look at how this fits into our portfolio view and reference the methodology section, which can be found in the appendix and on our research and insights page.
Gentlemen, thank you for joining me today and discussing this important analysis on the investable universe.